Hello and welcome to the Smart Money Simplified podcast with your host, Brent Mekosh. Brent, good to be with you again. Interesting topic on the schedule for today.
Yeah, it is. It seems like every probably 12 to 18 months or so, I start getting phone calls from clients about Bitcoin and cryptocurrencies. And it seems to directly correlate with what these assets are doing out in the marketplace. And lately Bitcoin's been on a tear. And so it's one that's back on the radar again. And seems like we've had two major waves where you had Bitcoin first went, I think back in 2017, 2018, went up to maybe 18,000 a coin. And then it was 2021, I guess, or maybe 2020, it went up to about 66,000 a coin. And each time was followed by pretty big sell-offs. Now we're up in the mid 30s again. So it's sort of back in the conversation. And particularly because now they're talking about packaging this into one or more or several ETFs that will allow them to be kind of more broadly traded and get a little bit more institutional interest in cryptocurrencies as an asset class, but Bitcoin specifically. And so with that in mind, I've got a fantastic guest I've been wanting to get on here for a long time. So I'm really excited to have this conversation. I have Natalie Brunell. She is also a podcast host. She's got a podcast called Coin Stories, which I highly recommend everybody give a listen to if they're curious about this space. Big background in journalism, and really excited to have you on here today, Natalie. So thank you so much for joining me.
Thank you so much for having me. Looking forward to it.
So one thing I want to start with, in prep for this, I was actually reading your background, and I think that your journey into Bitcoin is actually where I want to start, because honestly, I got to be honest with you, I didn't read it until last night, but your family immigrated here from Poland. They really, they searching for the American dream, searching for I know what everyone that's come to this country has been after, and there's some fits and starts along the way for you, but just share that story with us, and because it's a big part, I think, of what led you into Bitcoin.
Absolutely. I think my background really is what motivated me and planted a seed a very long time ago. My family is from Poland. My parents grew up under communism. There was very little sense of social mobility where they grew up. And ironically, everything that was amazing when they were growing up was made in America. So my mom dreamt the American dream, and she really wanted to come here. She wanted her children to be born here. And she wanted to give them opportunity and for them to get an education in the United States. And she tried every single year. She tried for the lottery, the visa lottery. It was very, very difficult to be able to try to immigrate to the United States. And the opportunity did not come until my mom was 38, my dad was 41. So by that point, they were at a point where they thought maybe we should stay, especially my dad. My dad said, we know this country, we don't know the language, we'll be starting over. I was 5 at the time, and my mom said, no, their lives, they will have more opportunity if we still go to the United States and take a chance. So really grateful for my mom doing that. And they started over in their late 30s, early 40s, worked so hard. My dad would wake up at 3 o'clock in the morning to head to work. I just remember him scraping the frost off of his car because we could only afford a tiny apartment where they slept on the sofa, and we didn't have a garage. I thought you were wealthy if you had a garage. And I really just, I was motivated to get a good education and to work hard so that I could justify the sacrifice that they made. So I was always motivated to become financially secure and to get an education. And I was inspired by their hard work. So by the time I was in high school, they were finally able to get a small townhouse outside of Chicago. And then I went off to college and the great financial crisis hit. So just as they had finally settled into a small version of the American dream, a modest one, they lost everything seemingly overnight. They went bankrupt. They had to move into an even smaller apartment than the one we were in before. And I saw it just really crush them, both economically and crush their spirits and their motivation. And so I think that was where the seed was planted, that something in the system is very wrong. Something is broken, because this isn't what the American dream stands for. The American dream is about the fact that if you work hard, you can achieve anything you want. You can at least certainly take care of your family, right? And be part of the middle class and contribute to society. And I saw that American dream declining. And at that time, I entered into a career as a reporter. So I had the chance to meet other families in small and large communities across the country who were facing a lot of the same issues as my parents. The fact that things were sort of getting harder, the goalpost was moving in terms of what is financial security. Everything that mattered was getting more expensive: real estate, cost of education, cost of medicine. And I did not know what the root problem was until I stumbled upon Bitcoin and started studying the history of money. So I know that's a bit of a long-winded answer, but I was a reporter in 2017, discovered Bitcoin, was very skeptical like so many people, and eventually started to really study it and went down the rabbit hole and realized that this could solve the very problems that so many people are facing in both America as well as countries around the world.
Yeah, you bring up some great points. And first, to your parents, that's always to me the most amazing story when you have people that, particularly with young kids, I've got 2 young kids that will pick up and uproot their lives and start completely new. And it was based on this dream that you could come here and do amazing, great things. And I'm an optimistic person, so I still believe that is largely the case. But it's harder. Anybody that says it's not harder is really not being honest. If you look at statistically, even since Nixon took us off the gold standard in the 1970s, 1972, I guess it was, your basic wages of most Americans have been flat. And what you found is that you've gotten a greater concentration of wealth. Those at the very top, and I'm all for those at the very top doing well also, but you found the masses of people have been kind of stuck. And I think that's because they have not been able to benefit from unsound money, quite frankly. And by any measure, since the inception of the Federal Reserve, but particularly since the 1970s, we've had unsound money. And I think that's where something like Bitcoin becomes pretty interesting. So you're a reporter, you discover this thing called Bitcoin. Most people, when they ask me what it is, and pretend you're talking to a kindergartner here in terms of knowledge about cryptocurrencies, because it's definitely not my primary space. The way that I understand it is essentially you've got a digital asset here that is limited by the algorithm in terms of how much of this thing can be produced. Explain it to me, since now you've been in the space since 2017. Tell me what cryptocurrency is. Tell me what Bitcoin is. And then I want to dive into what got you so interested in it, looking at this as an area really you've focused your entire career around now.
Yeah. So obviously Bitcoin, I've now come to learn, is very different from crypto, the industry. And Bitcoin is a new form of money that is completely decentralized and it's scarce. I think those are the 2 most important properties, because when we think about the money that we know and use today, first of all, it is already all electronic. We're dealing with digital ledgers that are controlled by central authorities, whether they be banks or governments, and they have to give you permission in order to send your own money. And the second thing is they print money. So they expand the supply, and that dilutes the value of everyone's units of currency. So Bitcoin is the opposite of that. Instead of having a central authority, it is a permissionless open network that is completely decentralized with no central point of failure, no headquarters, no language, no president, no CEO, and it's scarce. So there will only ever be 21 million units. No one can manipulate it and no one can inflate it. And I think that that's really powerful, because as you dig into the history of money, you realize that in the past with other empires and nations, even when they've been global reserve currencies, at some point, rulers have diluted the currency in order to finance government projects or wars. And unfortunately, that has led to a decline in society, and it's allowed for economic decay to eventually set in. And another nation sometimes took over. So I think when we look at history, it really informs what could possibly happen when we manipulate money, and there are a few people in charge who basically have a monopoly, and they tend to benefit from it through the form of the Cantillon effect, and everyone else is working harder and harder for money that's continually diluting and worth less. So for me, Bitcoin represents the opportunity to have a form of money that no one can control, that no one can manipulate, that offers you direct property rights, a bearer instrument that you can take custody of and no one can seize or ever take away from you. And I think in this world, especially today, that's incredibly powerful.
Let's talk about the Cantillon effect a little bit, just to bring our listeners up to speed. Basically, you're talking about sort of the moral hazard that's in place when you're the world's reserve currency, essentially.
Actually more than that, because with reserve currency, there's also the dilemma of running trade deficits, which hollows out the middle class and the industrial base. But really the Cantillon effect is about if you are closest to the money printer. And so basically that would be the government, the central bank, as well as people who are close to that world, Wall Street firms, massive corporations that have great credit ratings, wealthy people, they benefit the most when new money is issued because they get those initial dollars first, and then it trickles down, and people at the end of the line, the poorer that you are last to get those dollars. And so unfortunately with inflation, as they dilute the money supply, the people at the top closest to the money printer benefit the most. They have a disproportionate advantage, and the people at the end of that line have the least advantage, and they're getting poorer and poorer.
I think there's a lot of, it's interesting that you bring that up in terms of who's closest to the money, because, one of the things that I talk to clients about all the time is, they'll look out at the economic landscape and again, there's some really positive things happening, but there's also some stuff that's quite frankly kind of scary. And they're like, well, how can you be invested in equities in this kind of environment? And there's a lot of reasons, but one of them is the economy. And this is something I was saying to people at the beginning of the year. The economy is often disassociated, quite frankly, from what's happening in the financial markets. I live here in the desert Southwest in Arizona. If there's a rainstorm, the water goes to the path of least resistance, which is the desert wash, as it sort of accumulates and runs down there as a torrent. The financial markets are a lot like that. And so what's interesting is you had Silicon Valley Bank fail at the beginning of the year. You had a couple other banks fail as well. You looked at the Federal Reserve's balance sheet from declining the entire 2022, all of a sudden takes a pop up. Well, what do equities do? Equities took a pop up in the beginning of the year as well. It's direct. It's a liquidity measure at this point more than it is real economic, progress. And so that's a really interesting point that you bring up as well. And I think that those that are closest to that benefit again to a point, but at some point you got to be bringing everybody along for the ride. I mean, or else it's a recipe for some social social things that necessarily aren't in anybody's best interest.
Well, and we're really seeing that, right? Because younger generations now feel very priced out of things like the real estate market. And they look at some of the stocks that have performed so well and generated wealth for previous generations, and purchasing one share, it costs a lot of money. And so people are increasingly left behind. And that's because when the new money is issued, it generally creates more and more asset inflation. And disproportionately, there are certain members of society who own more assets, who own more equities, who own more real estate. And that's really sad, because a thriving middle class, I think, depends on the ability to be able to own a piece of property and to be able to plan for your retirement. But I think when we decoupled from a commodity like gold, and we went on this total fiat standard and further into debt because we are the global reserve currency and we really abused that power, we came into a situation where it's really difficult to save. Capitalism is about saving so that you can accumulate capital to then invest. Investment actually carries risk. And so people aren't able to just put their money in the bank and allow for it to accumulate in value to take care of themselves in the future, take care of their families, plan for college educations and all that. They have to risk it. And with real estate, you have everything from taxes to maintenance. What if the laws change in that city? And now with equities, what's going to happen to that company in 10 years? Can you trust the leadership? But that's essentially what has been encouraging money to pool in that asset class, is the fact that you can't retain value just through saving the currency. You have to put it to work and generate a yield. And so money is going into companies that have no real growth, no real value, right? And they're able to, at low interest rates over the last decade, they were able to buy back stocks, take on more and more debt. Meanwhile, these companies are barely generating any revenues. I mean, a lot of them are zombie companies. Our country is really a zombie company if you think about it, because we are taking in less than we are spending. So that's a real problem, because that, again, doesn't represent prosperity and true productivity. And it's going to cause us to continue to be on this decline. We were once this superpower, the world's greatest creditor nation, and now we're just going further and further into debt, and we're hollowing out the base. And so you can see why there's populism uprising. People don't know where to place the blame. And unfortunately, politics tends to be the outlet, and social media is a great place to vent it. But we have to look deeper than that, because truly it's the money. People are working harder for money that's worth less. The wages that you earned at a job 30 years ago that could have afforded you a house in the suburbs, now you need 2 to 3 incomes to maybe afford the same thing. Something is clearly wrong. And what's amazing is we actually have a solution. I mean, if I didn't know about Bitcoin, I would be far more pessimistic about the future and how we address a lot of these issues. But with Bitcoin and with this incredible technology, I actually have hope that we can peacefully opt into this new parallel system and rebuild an economy essentially from scratch on more sound footing, on concrete, as opposed to the quicksand we're currently built on.
Yeah, I do want to spend some time talking about what's happening, with federal finances. But before we get into that, let's talk a little bit more about so you obviously you wrote a story, I'm guessing, about Bitcoin, which is what first sort of turned you onto it as an asset. Can you tell me a little bit about your discovery of this and the rabbit hole that led you down?
Sure. So I actually heard about it from friends. I was living in Sacramento, California, covering California's Capitol, legislature, breaking news, all of that. But I had a lot of friends in San Francisco who worked in the tech industry. And one weekend, I just remember they were talking about cryptocurrency and Coinbase and something called Mt. Gox, where someone lost some money. So it sparked curiosity for sure. But at the time, I thought with so many other people think that this could be hacked, it's a scam, or maybe it's just like stocks. And I didn't know a lot about the stock market at the time, unfortunately, because I didn't have great financial literacy in my education. And then I had a mentor of mine give me the book, The Bitcoin Standard. And at first I resisted it because I thought it was a computer science or programming book, and I don't have a technical background. But one day I sat down and I read it, and it was like a veil was lifted from my eyes. And I thought, oh my goodness, why did I never learn about the history of money? Why did I never spend time studying the fact that we went off a gold standard and what that really means, what the consequences could be, how that has impacted nations that have diluted their currencies and debased their currencies in the past? What is Bitcoin, and how could it possibly address this? So I became very hungry for more information, really just consuming everything I could before and after work. And then I pitched a story. I wanted to cover it as a journalist. I was able to do one story at that time in the news market. But it just wasn't the priority of the news markets to cover this space. And throughout my career after that, I found my passion was growing, but I didn't have a way to really engage in that passion through my journalism and my reporting, which is why I started my podcast and basically did it as a hobby, not expecting the side hustle to become my full-time job.
And so at this point, what I think the one thing that can be challenging for some people is how they can understand this thing. And so go a little bit more into how it's created, how it's mined, and how the algorithm basically limits you to that 21 million coins in this case.
Yeah, sure. So first of all, I just want to let people know that this can all seem intimidating and techie, especially for folks like me who didn't have that sort of background of engineering, computer science. But with time, it is actually very, very simple. And I want to remind people that there are a lot of technologies out there that we use, we take advantage of every single day, and we don't necessarily know how they're built and constructed. I don't know how the camera is technically designed and constructed that I'm looking at right now, or my iPhone at a very technical level, but I get tremendous value out of it. Now, of course, with something like where you're going to trust your money, you probably want to study a little bit more, right? So I took the next steps to really learn, what is the blockchain? Okay, well, the blockchain is actually a digital ledger. It is a series of transactions that are chained together in a series of blocks. And that ledger is owned by everyone and no one. It is distributed around the entire world, and anyone running this open source Bitcoin software has access to the ledger. So I run a full node. I essentially, a node runs the Bitcoin software and has a copy of the entire full ledger on their computer. And every time a block is added, everybody on the network has to agree to it, has to agree that that block of transactions will be added to the chain, and then they move on to the next one. A new block is added approximately every 10 minutes. And it is all operated on this ingenious algorithm that was designed, created by Satoshi Nakamoto and released into the world in about 2008 through the white paper, which is actually right behind me. And the process for being able to add blocks is called Bitcoin mining. It's done by these super fast computers called ASICs, and they're essentially guessing for a very, very big number. Before, I used to hear words like cryptographic puzzle or really, really difficult math problem. It's honestly even simpler than that. It's like rolling a dice and trying to get a number. And once one of those computers hits a number, then they are able to add a block of transactions to that ledger. And one way that I want everyone to understand the consensus mechanism, which is really important, this proof of work, that you did the work, you put in the energy to try to mine and guess for the number, but then every single computer, every single node on the network has to say, yes, that is a valid block. We can verify that it is true and accurate, and we can add it to the blockchain. Think of it like a Rubik's Cube or even like a bike lock. You can have a combination, right? And let's say it's a very, very long combination that's bigger than a number that a human brain can comprehend. But as soon as someone hits the number, the bike lock, it unlocks, right? And everyone who's looking at the lock can verify, oh, yes, that was the right combination because it clearly unlocked the lock. Or you can see a Rubik's Cube and say, oh, that was the right combination because now all the colors are in line. It works in the same way. Every computer can verify that a block was mined accurately so that it's added to the chain, and then everyone updates their ledger. So it's an incredibly amazing.
And it becomes more and more difficult as it progresses.
Yes. So the more computers that are on the network, the harder that number is, the longer that number is, the harder it is to solve. If computers are removed from the network mining Bitcoin, like what happened when China banned mining, so the hash rate dropped, the computing power dropped, the number became easier to solve so that you consistently remain on that issuance basis of every 10 minutes is a block.
In terms of the ledger, I think one of the things that it's important for listeners to consider is that most of our businesses are conducted with some form of a ledger. You go to a title company, it's essentially a ledger. The bank is a ledger. And what makes it work is the fact that these large single institutions are trustworthy. And what you're saying when you talk about distributing this ledger across multiple people, if one person maybe can cheat, but everybody can't cheat. And and there has to be full consensus. Is that correct?
Correct. Exactly. Okay. Yes. And no one has to trust anyone, and no one has to ask for permission, which is very different than the banking system.
Now, in terms of digital assets, have you read Going Infinite yet?
I have, yes.
Yeah, phenomenal book. It's Sam Bankman for those. It's Michael Lewis, that's FTX, Sam Bankman-Fried. One of the things that to me stuck out is, so you've got this, you essentially have this digital asset, but you've got to put it somewhere. So the exchanges have to be trustworthy, because in the case of FTX, it wasn't. They basically essentially stole customer funds at the end of it. Talk about, so you got this digital asset, where do you put it?
Well, so I think that's what's confusing with people, because Bitcoin is not like it's not like a file, right? And this was the amazing thing that one of Satoshi's most brilliant inventions is the fact that you can send value that truly leaves you in a digital way and arrives with someone else, and everyone can verify that the value was transferred. Because before, this is the double spend problem that was solved with Bitcoin. It was a computer science program for many decades. If I send you a file, like an MP3 or a movie or a piece of paper, or a Word document rather, there's a copy that remains on my computer, right? So now we both have it. So you can't have that with money, because then both people can spend it. But essentially with Bitcoin, it's UTXOs, it's outputs. So it's not like a physical file that is sent. And that maybe gets in the weeds for those that aren't technical, which I totally understand. But I think you're more so getting into the question of where do you purchase Bitcoin, right? Because there's only a couple of ways that you can get Bitcoin. You can mine it, you can expend energy to try to guess at this very large number and actually mine it, but it's harder and harder to do that. or you can purchase it. And you could do that through an exchange, or you can do it peer-to-peer. So there are places where if you know someone who has Bitcoin, you can exchange value if they're willing to sell their Bitcoin, and you guys decide the exchange rate. But most people purchase on exchanges, on third parties that are very similar to retail banks. And a lot of those have come under scrutiny. Some of them completely have blown up, including FTX, which we were just talking about. So you have to be very, very careful. I always take self-custody, and I know that that's another level up of, people just entering the space. Okay, I'm ready to buy. Great. But there is that third step, because if you are buying Bitcoin and leaving it on an exchange, you technically don't hold the keys to it. And so the Bitcoin exists within the network, and you can verify that someone has the key to it. So perhaps you're trusting your custodian, but until you take self-custody, technically that Bitcoin is not in your possession. You're allowing someone to take custody of it for you. So the safest is to become your own bank. I do multi-sig custody, where I don't have a central point of failure, and I trust the exchange that I purchase my Bitcoin. But again, that takes that extra step of research, because you have to be very careful and avoid the companies that are offshore, maybe dealing with a lot of regulatory issues and lawsuits, which many of them are, including obviously FTX was dealing with a lot of that. But it is an area that you don't want to just look at and purchase willy-nilly, not knowing how you're going to be able to take self-custody. Some platforms don't even allow you to take self-custody. They hold your keys for you, and you don't want that.
So to give an example, perhaps that some people might be able to relate to a little bit better is you've got a couple options. Let's say you want to buy gold, physical metal. Mm-hmm. You can keep it in your own house, in your own safe, or you can put it in a safety deposit box, or you can have another company custody that asset for you. Is it similar type thing?
Yeah, exactly. I don't think Bitcoin is too dissimilar. And I mentioned earlier in this podcast that all of our money is electronic already. Not a lot of us have a stash of cash. I mean, maybe some of the people watching do, but you're essentially trusting the bank that they have the money when you go to withdraw it. But the crazy thing with our banking system that I learned through studying Bitcoin is, because of fractional reserve banking, right now, all of the major banks in the United States only have a tiny, tiny percentage of our money on hand. So if everyone were to go try to withdraw their cash, they would not be able to. Now with Bitcoin, what's so amazing is, because it is a bearer instrument, you can take self-custody and it's yours. At any time, it is in your position. You can be your own bank. Whereas if you trust a third party like a bank, the money may be there one day, or you may be not able to access it the next. And I know that maybe sounds dramatic, but we've seen accounts frozen and people unable to access their funds in different countries, including Lebanon this year, in Turkey, Cyprus many years ago. Everyone knew about the bail-in for banks there. Even in Canada, people's accounts were frozen. So even though we don't want to think about the idea of financial censorship like that, it's not out of the question. So it's really important to have a form of technology that is resistant to censorship, that is a bearer instrument that you can actually custody yourself as a form of digital property.
And so do you think that, the one thing I think that's been interesting as I've been looking at the last several years, Bitcoin seems to me that it's been tied more to liquidity than it has as a safe harbor asset, say like gold, for example. But that in the last year or so, it seems like it's changing a little bit. Are you seeing that as well?
Yes and no. So I agree that it has been correlated with liquidity, and it has been it has been the beneficiary of a decade of QE, right? I mean, Bitcoin was born into the great financial crisis, and they initiated the money printer and really didn't stop until last year. So obviously Bitcoin has benefited from that. Now you look at gold. Gold has not performed very well over the last 10 years. Has it been a hedge to inflation and over the long run? Sure. But look at gold's performance next to Bitcoin's. I mean, Bitcoin is the best performing asset of the entire last decade. And even when asset classes like equities and some of the Magnificent Seven and the big tech stocks that we're familiar with, those have obviously also benefited from liquidity and money printing. But Bitcoin is on a completely different level. And one thing that I also find really interesting that I hope people think about is inflation. We talked about it earlier. They're constantly diluting the supply of money, issuing new currency, going further into debt, running high deficits. Most people think of inflation as that 2% target that the Federal Reserve gives us, which is a pretty arbitrary number. Who decided that it's going to be 2%? Because basically compound that over the years and what is the half-life of your dollars? That starts to come into play. So again, people are trying to get yield and they're trying to beat inflation. They've been going into equities. The S&P 500 has on average had an appreciation rate of about 7%. Well, guess how much the monetary inflation of the base supply of money been?
It's been about 7%.
About 7%.
Yeah, and I was actually going to bring that up. If you look back, if you look at physical gold, for example, if you go back to since we got pulled off the gold standard, now they haven't moved in correlation. There's been periods of time where gold has made these phenomenal moves, and there's been periods of time from say 1980 to 2001 where it was a completely dead asset. You got your tail handed to you. But the average annualized rate of return on gold has also been about the growth of the money supply, which is the S&P, same thing. You're kind of tying yourself to what the federal government and the Federal Reserve are going to be doing in terms of increasing money supply.
And for me, that was like, it's like, oh my gosh, we're basically just keeping track. We're just treading water. And then you look at something like Bitcoin, it's performed on average 40 to 50% year over year. And yes, certain stocks have outperformed. But that turns, the average hairdresser, the average accountant, the average doctor into a stock picker. I mean, we should have better money than that, right? So this is one of the reasons why I get so excited, because if you just take a small percentage, that the asymmetric benefits of having that in a risk-adjusted portfolio have really, it's been enormously beneficial for people, all ages, all backgrounds. It's a way to save for the future, and we really desperately need that.
Well, I'll play devil's advocate a little bit here, and I'm curious what you say about these things. So let's say that if you look at any currency, for example, the government doesn't want competition. I mean, they want to be able to control the currency, control how much of it is issued. At what point does an asset class like Bitcoin get in the crosshairs? And it could be under the guise of a lot of terrorism around the world is funded with Bitcoin because it can be anonymous. Not always anonymous, but it can be. What's the risk, do you think, of the regulators coming in and saying, you know what? Enough of this. We're going to shut this thing down.
I used to be worried about that before I think I took the extra time to really study Bitcoin, as well as the history of the early internet. There was a lot of pushback with the early movements of cryptography and encryption, and technology always wins. The better technology always wins. And this is a technology that I think the United States will want to embrace from a strategic standpoint, from a national security standpoint, for an entrepreneurial standpoint, to encourage prosperity and economic vitality. So I'm not as worried about that, actually. I've heard presidential candidates who talk about potentially incorporating Bitcoin in something like a basket of commodities that our currency is eventually tied to. Unfortunately, you can't beat a great technology once it's taken hold with enough people. And again, this is open source, it's borderless, it's permissionless. And so if you shut it down, if you try to, you're going to be creating a disadvantage for your own nation, as well as creating an incentive for people to leave and for other nations to take over. So with something that is completely decentralized, I don't think a government can stop it. They would be shutting themselves out of a lot of opportunity. And I don't think we're actually even moving in that direction, because if you see the regulatory developments that have happened over the last 2 years, it's really made it a spotlight that Bitcoin is different. Bitcoin is the true digital commodity. Bitcoin is the least controversial. Bitcoin is the one with the least amount of issues surrounding it, and it will be probably integrated into the global financial system. I think that with the ETFs that are going to be passed, that's going to incorporate it into more institutions and treasury reserves. So I think actually we're moving in the opposite direction. And I would be more worried about it if I lived in a country that had more authoritarian leadership, which still billions of people around the world live in very, very oppressive regimes who are probably going to be very, very anti-Bitcoin.
Now, what happened? Because I don't have any clue the answer to this. So I know that China had a crackdown on the Bitcoin miners specifically, or cryptocurrency in general.
Mining. Yeah, they banned Bitcoin mining, and yet still about 20% of the hash rate is there and people are mining it. So
okay, so they are. So they basically found a way around that.
yeah.
How about in other countries around the world? Has anyone banned the usage of it by their citizens?
I'm not sure. I think a lot of countries, including Nigeria, and other nations that are trying to move forward with a CBDC, they're less in favor of it. But it's really hard to ban something that is code. It's a form of speech. It is a form of digital property. So it's far less controversial than I think a lot of nations make it out to be. And why wouldn't you, if you were here in the United States, whether you're on the left or the right or somewhere in the middle, why wouldn't you want an asset that everyone has access to that can empower them to be able to save for their future so that they have money so that they can actually spend into the economy and produce value and produce goods and services. So I really don't understand what the pushback would be. And again, we need to do something because on a global level, we've gone so far into debt that it is hurting our ability to plan for a future as both a nation as well as the individuals inside this country, and something needs to be done to strengthen our economic outlook, because right now we can't continue paying our Visa with our MasterCard, with our American Express, right? Other nations are not going to look at treasuries as a safe haven asset anymore, and they're starting to de-dollarize more and more. Some of them are talking about a basket of currencies or something tied to gold. I don't know how that's going to play out, especially in a digital world with nations that don't trust each other. And again, none of this is going to happen overnight. The global reserve currency is the dollar, and it's very entrenched in the financial system around the world. And 80% of transactions, I believe, globally take place in the dollar. And there's a lot of dollar-denominated debt, but it's a trend. It's a cyclical, secular trend that is moving in a certain direction. And I do believe that Bitcoin will be a global reserve asset. I believe more and more nations will put it on the balance sheet. More and more are starting to mine it and starting partnerships with mining companies, even in order to be able to facilitate mining in their nations and in their sovereign regions. So this is going to be an area that continues to grow and evolve over the next 10 years. And I think it'll look very, very different 10 years from now.
So do you think in terms of the recent rise, because I think Bitcoin last 12 months, 15,000 to say 36,000 where it is today, is that because we potentially have this enormous demand that's going to come online if they do in fact start issuing ETFs with this? Or is it because, quite frankly, the federal government's got about 8 to 10 trillion, depending on the number that you're looking at, of debt they've got to refinance in the next 12 months, plus another 2 trillion in deficit spending. They've got to meet that as well. Is it I guess my question is it more, is it the fear or the greed? Is it the fear that the treasury is going to continue to sort of erode away and lose its value? Or is the greed that, hey, we got this asset now that might be basically available to somebody in their E-Trade account where they can go buy an ETF that is backed by this thing? What do you think's the driver here?
Yeah, I think it's both. I mean, number go up certainly always helps. The most FOMO is when it's at the top and people are trying to pile in. But at the same time, I think there is greater and greater recognition that the current track that we're on is not sustainable. And we can't just keep increasing interest rates and keep the deficits growing, because at some point, the buck stops and we're going to have a financial collapse. So I think it's a little bit of both. And I don't know if you've read the really good book, Psychology of Money, but I think it's really fascinating. And when you look back, everything is so much clearer when you look in hindsight. But when you're in the moment, psychology is a really interesting thing. Human behavior is something you can't always predict. So I think that's what will define Bitcoin over the next 10 years is what will humans do in the face of growing uncertainty and growing economic fragility around the world and instability. And thank goodness that we have this asset class that if you study it, I don't know anyone that has spent 10,000 hours like me studying Bitcoin who says, no, I'm going to pass on this.
Well, I do think that there's a there in terms of cryptos for sure. And you look at, through history, having a safe haven asset has always been it has been important. If you look at people that arrived in the United States off the boats from after the Vietnam War, they had gold coins sewn into their dresses. This, I think, is a little bit different because of the ability to sort of transfer it instantly. You don't have to move it. You know what I mean? You can transfer it instantly around the world. How now in your world, in the crypto space, have you had now a lot more interest in the last, say, week or so, just given the fact that, we had a treasury auction earlier this week that didn't go quite so well. And there's some concern around, there's some concern. If you look at it, put it this way, here's what keeps me up at night is you have right now, we've got 33, 34 trillion, depending on the day, of debt. The United States has had enormous privilege being the issuer of the reserve currency of the world. We've had enormous privilege of being the issuer of the debt that is essentially the reserve store value around the world. Yeah. But now we're at this point where, 34 trillion, 3.5% interest, you're talking $1 trillion to service this. And the federal government's going to have to refi, again, 8 to 10 trillion over the next 12 months. So it's a boatload of debt. There's got to be buyers for it. And the listeners that basically aren't quite sure what I'm talking about, this will probably hit in a couple of weeks. So earlier this week, there's an auction of 30-year treasuries that's, it wasn't a failed auction. I've heard stuff like that. It was not that. There was plenty of buyers there, but the buyers were not willing. Basically, they demanded a higher interest rate than anyone was expecting to take on this debt, and it's a big deal. It's a really big deal. So. And I think it was the worst auction they'd had in like a decade or something like that. So, and you had, obviously, I think it was Moody's came and they put us on negative watch, as opposed, it wasn't a downgrade, but they put us on negative watch. And it's the last rating agency that had us at AAA. Is this something now? Because this is we're kind of in this new thing here, where if you look, even in 2020, we had boatloads of debt, but you had the 10-year at 50 basis points. To finance this with a 10-year at 4.5 now, it's a big difference. It really matters. Is there chatter about this in your world?
Oh, yeah. So my last 2 episodes were about this. I talked about the half-failed treasury auction, as well as the Moody's downgrade.
Failure. We don't
downgrade. Yeah, I call it a half failure. This just shows the growing credit risk that the United States has in terms of the world stage. I mean, now I mentioned in my last episode that 10 countries have a higher credit rating now than the United States. And we were that sovereign, supreme, pristine collateral with our treasury. So there are cracks under the surface. Again, nothing that's an earthquake that's going to necessarily happen tomorrow. But this is a trend that's moving in a certain direction. You just pointed out those deficits. We're paying more and more on just servicing the debt, our interest payments. It's ballooning to an amount that is bigger than our military budget. It's unsustainable. And so the reason I was smiling toward the end of your question is because thank goodness that we have something like Bitcoin, because these treasuries are worth hundreds of trillions of dollars in terms of an asset class. Okay. If you take even just a small percentage of that and people start to move their wealth into Bitcoin, that is a significant appreciation and upside potential for something like Bitcoin. And the fact of the matter is, no matter what they do, no matter how they want to stay tighter for longer, higher for longer, at some point, they will not be able to sustain it. Our debt level is too high. They will have to come in and liquefy the market and print. I don't know what that event will be. I hope it's not some sort of massive credit event that sparks something worse than 2008, although certainly some analysts are predicting it. But unfortunately, we are on this spiral of issuing more and more and more debt to pay off previous debt. And so the higher the interest rates go, or the higher they stay here, it has an increasingly tighter effect over time. And we just simply cannot afford it. We simply cannot afford it. So I wouldn't be surprised if we have more issues in treasury bond auctions. And I think that eventually something will happen where they have to come in and print. And then what does that mean, right? All the stuff we talked about before, diluting the currency, asset inflation, number go up with Bitcoin.
Yeah, I think to me, at least in my line of work, the biggest story for sure, I'm 50, so of my lifetime, having been in the business now since I was in my early 20s, is what's happened in the bond market. I mean, we've never had the worst year you ever had for the aggregate bond index in the 1970s was down like 7. We're down 13 last year in that. You had 3 successive years of negative rates of return. You look at the 10-year, the annualized negative rate of return over the last 3 years has been 7.5%. And this is from the asset that many institutions are holding as, as their major store value. And I think that's been the massive thing. And, and I keep getting people, coming into my office and wholesalers and things saying, hey, you got to add some duration, because my duration is low. It's under 3 overall for the entire book. I don't know if compliance is going to make me pull that out or not, but why would I, why? Because you're basically at this, you've got this situation set up where one of 3 things has to happen. You need radical draconian cuts to the federal budget.
Right.
You need enormous economic growth to grow your way out of it,
Right.
or you've got to monetize it.
Right.
And to get
Exactly.
draconian cuts, maybe you get a sea change, maybe that happens. I don't see that happening. Rapid economic growth, then you need to do things on the other end in terms of decreasing regulation and kind of letting it rip. If you're going to get that, the most likely thing, I mean, the Treasury's not going to default. It's just a question of who comes in and buys it, because the foreigners they're not showing up to the auctions anymore to the degree that they were. And so that's it's just at the front end, but I think it's the financial story that's unfolding in any of our lifetimes, because no one's been alive long enough to see this happen in the past. And you had a very
100%.
and you had a very orderly transition. Last superpower was Great Britain, really orderly transition to us, because essentially we were first cousins, and the future could potentially look a lot different. And again, I'm an optimistic person, because I do think that when things shouldn't persist, they won't. And there's a lot of things that I think that is happening in our financial system, quite frankly, that shouldn't persist, and they won't. Right. And if you look at, and from the equity standpoint, anytime there's been a currency crisis or concern about that, equity markets tend to go parabolic. So because the money, again, it's that wash thing that we talked about. Money's going to flow somewhere. But I'm really curious what's going to happen to this asset class that you've spent your career covering once this becomes mainstream in the form of an ETF. I think it's again, it's not a recommendation to buy or sell it or whatever, because I don't know that for sure. But I think how it plays out from here is going to be pretty fascinating. So what's your what's your outlook for the future in terms of how do you think this all shakes out?
Well, going back to what you were just alluding to, we have a sovereign debt crisis, and maybe before it was more of an orderly transition out of Britain being the U.S. global reserve currency, or the global reserve currency, but at the same time that was emerging out of a world war, right? And many people just feel like that we're on the brink of a lot of that kind of volatility here and now. So I would expect a lot of uncertainty going forward. We've kicked the can up to the sovereign level. And so the government will have to come in and print. And that's not good news for people who hold cash. The bondholders will be left holding the bag eventually. And what you said earlier about there's no appetite for cutting the deficits, because politically, no one wants to think about the long term, because the long term means that there's going to be short-term pain and you might not get votes, right? If you call out the truth, you're not going to be able to cut the obligations and the Social Security and the things we actually need to cut. Stanley Druckenmiller talks about this a lot. No one has the appetite to admit that and to make those changes. So what are they going to have to do? They're going to have to come in and debase the currency, monetize the debt, QE, infinity is what we talk about in Bitcoin. So I really urge people to just take the time to study something like Bitcoin. And I think that the future will be both volatile in terms of fiat currencies, but I think, one Bitcoin equals one Bitcoin, and the price in those volatile fiat currencies is going to continue to go up as people look to this alternative as a flight to quality, as a flight to safety, in order to preserve their wealth into the future. I'm certainly going to be one of them. I think it's really sad what's happened to my generation. I have a lot of peers who have worked so hard for the last almost 2 decades of their adult lives, and they still feel so behind and unable to obtain something that once represented the American dream. And I hope that Bitcoin helps them. I want to encourage everybody to just take the time to learn about it. Download a wallet on your phone, send someone some Bitcoin. You can purchase the same amount as you'd go out and get a coffee. There's a lot of unit bias, people thinking, oh, I need to have enough money for one Bitcoin. You don't. I hope one day we're accounting in Satoshis so that people feel a little bit better about it. But yeah, it's an incredible space to be in. And I will certainly be on the front lines watching how it gets integrated into the global financial system, because I do think it will be a core asset going forward.
Well, I'll end with this. I'll end with a little bit of optimism. I think it was Churchill. I've used this quote several times, and he said that you can always count on Americans to do the wrong thing until they have to do the right thing. And so, I am absolutely optimistic about the future. I think that, particularly in my line of work, if you don't believe that human beings are going to continue to innovate and grow and do great things and create new efficiencies, and what the hell's the point? You've got to believe in that. And I'm also a believer that technology is going to solve a lot of our problems. I think it's a great equalizer. The iPhone that is in my pocket gives me access to more information than no one in the world had 10 years ago. It's incredible.
Yeah.
And it also gives me at least the opportunity to access the same platforms that people with a higher, greater degree of visibility have. So I think that's it. Again, it's not all doom and gloom, but I think that's it's going to be very interesting whether it's Bitcoin or it's something else. The world does continue to adapt. Money continues to adapt. It continues. Capital always goes where it's treated best in the end. In the end of all this. So I think it's going to be really fascinating to see how this all plays out. But Natalie, if people want to listen to more of your work, reach out to you, learn more about what you're doing. How do they do that?
Yeah. And can I say just one last thing about
Yeah, please.
revolutionary technologies? I come from a news background. And when you look at the history of how journalists and legacy media, including the New York Times, have covered groundbreaking technologies, I think you have a really important lesson in how wrong some people can be, or the mainstream view or the general public can be, because we rejected electricity, we rejected airplane technology, we rejected the early internet. There were writers and journalists who said that it would be no more influential in society than a fax machine, and yet it's transformed all of our lives. So I really encourage people to just not sleep on this, because it is a transformative technology in the same way that the printing press changed our lives, the internet, electricity, all of that. I think it's so incredible. So I hope people check out my work. Podcast is called Coin Stories. It's available on audio as well as video, and I'm very active on Twitter, X at Nat Brunell.
Awesome. And again, Natalie, thank you so much for joining me. I appreciate it. It's been a great conversation.
Thanks so much.
Yeah, terrific conversation. Thank you, Natalie. Thank you, Brent, for facilitating it. As always, another fascinating episode. Before I go, I wasn't going to raise this, but let me bring it up really quickly. I think some of the pushback that you alluded to earlier to the Bitcoin has to do with the notion that a nation's coin is its sovereignty. And it has to do with the notion that you surrender your coin, you surrender your sovereignty. And that was another word that was used a lot. So that, I wonder if that's not an issue. Well, I know it's an issue. Whether it's a real issue or not is another one. How do you answer the people who say, hey, Natalie, if you give up the sovereignty of your coin by going to something like a cryptocurrency or Bitcoin, you are giving up your own national sovereignty? What's your answer to the issue of sovereignty?
Well, I think that, first of all, Bitcoin is a form of property, and it is rooted in those natural rights that we have to property, to sovereignty, individual sovereignty. And so when you move it on a national level, something like a form of currency that can never be debased, that you control, I think there's nothing more powerful than being able to store a nation's value in an incorruptible form of technology, a form of money. So I think that it's going to empower both people at that individual level, but also the nations that embrace it. I think it will be a powerful technology for using in a world of cyber warfare and cyber attacks, because Bitcoin is that truth network where you can verify things using cryptography. I think it will be needed in order to get us out of this debt cycle and spiral that we're in. I think it can be used to rebuild prosperity at home. And I don't think that we need to be in a world necessarily where we have 160 floating currencies. We could all be on the Bitcoin standard, one currency that is ruled by physics and by the rules of the world, as opposed to man. And I think that there's something really incredible about that. So maybe someday we will be on a Bitcoin standard. Maybe we will still have fiat currencies that we use for transacting and as a medium of exchange to facilitate faster payments. But ultimately, in a digital world, I think that the micropayments will take over through AIs and through a digitally native currency like Bitcoin. So that's very far out. But ultimately, I think Bitcoin will make all of us more sovereign, both at a national as well as individual level.
Terrific. Thank you, Natalie. Brent, you've told everybody how they can get a hold of Natalie and pursue, listening to her and learning more about her. But why don't we, before we go, why don't we have you tell us how to get a hold of you for those who might be listening to this conversation and want a further conversation?
Sure. From a social media standpoint, the only one I'm on is LinkedIn, but I'm pretty active on LinkedIn. Number here is 602-255-0555. Either Susan or Andy or Kayla or myself will pick up the phone. Website is mpadvisorsaz or smartmoneysimplified.com, and all our contact information is there. And if this generate any thoughts or things that people want to discuss in greater detail, happy to have that conversation.
Fantastic. And thank you, Brent. Thank you, listeners, for taking the time to listen to the program today. If you are not already a subscriber, it's easy. Hit the subscribe button. It's right there. Hit it. That way you don't have to wonder about when or where Brent's next episode is going to come out, because you'll be notified immediately. If you're so moved, we'd ask you to rate the conversation, rate the podcast, spread the word about it. Meantime, on behalf of Brent and everybody at MP Advisors AZ, I'm Bill Tucker, wishing you the best and reminding you, do not wait. Live your best life today. Thank you.